Welcome to another weekly update for members. This is November the 13th, Sunday, after the market closed on Friday the 11th of November. And what can you say as please see the market overview update video first, as I've commentated on the overall market there. But what a crazy week that was. The prediction I made last Sunday, what the stock market was trying to tell us was that perhaps it was a Trump win was looming, and certainly all the odds favoured that. The bookies said, the stock market was all the odds are against that. The stock market was the only thing that seemed to be saying, it wasn't that confident about things going into the elections. We see here on the date there on the what was the election on the 8th. There was a bit of a bounce actually straight afterwards. So it was a bit of a confusing picture going into it, to be honest. In any case, the book, just like Brexit, it was another repeat, the sort of thing I've been speaking about recently. I suspected a Brexit type moment. It was exactly the same. The bookies and the polls were all wrong because people were frightened to say who they were voting for. And and on a personal note, I can tell you that living in the States, that it was a very big distortion actually by the media. It's a big disgrace. It's not Trump supporters. It wasn't about racism or any of those nasty things that they're saying it's about. It's very similar to Brexit. People are fed up with the establishment. They're fed up with immigration. But a left-wing media tried to paint them as being deplorable, and they rebelled against it regardless, just like the Brexit vote. So in any case, now, as I mentioned last time, what that should have done, and it just shows anything can happen, is that a Trump win would send things into a spin. The uncertainty of that, was going to put gold up, and the stock market down. And if you were looking at the futures markets, what the numbers before the market opened, or especially watching the election as I did, you saw as soon as it became clearer that Donald Trump was going to win, gold went up like $80. The stock market was down massively. The Dow Jones was like down 1,000 points at one point, and then miraculously, overnight, in this increasingly high-speed world, a new narrative had evolved in that all of a sudden everyone acted like this is great news and Donald Trump's going to be good for things, and all the world's problems have magically gone away. So it was a very, very strange week that's left a lot of people scratching their heads, including myself, because I think Donald Trump will be good for the economy, but meanwhile, the world is in a lot of trouble, and he doesn't have a magic wand. There's still a lot of uncertainty, surrounding him. And it doesn't change the fact that things were overpriced anyway. Having said that, the market is currently in an uptrend. It's reacting like what it heard, but there's a lot more going on under the surface than this that doesn't make me confident that the rally will continue at this point. We've got to see more evidence. One thing was that the bonds have been completely trashed. This is the long-term bond market, which is people see this as an alternative to stocks, so the big funds. But that's going to mean yields are going to go up on bonds, which means bonds are more attractive, which money should be coming away from stocks. So this is an elastic band that sort of gets pulled around between stocks and bonds, and they can't have it both ways, and they kind of tend to correct each other. So anyway, that's a little bit technical though. Let's look at opportunities going on. In terms of shorting the overall market, my position there. I had just a third of my position as as I explained, very much a finger in the air job, because I just wanted basically some kind of insurance. And I explained how it wasn't scientifically done using the charts, because the charts are not yet. We looked just below the 200-day, but the SPX wasn't quite there, and it bounced off the 200-day. Next allocation for me, the stock market is going to have to be firmly below the 200-day, the SPX and the NYA on the weekly chart as well. I want to see that settle down first. So that's the big trade. There's no Make My Millionaire trades open right now. Way too much uncertainty for what must be completely cherry-picked trades. I'm sorry about that. I'm as frustrated as anyone, but we have to make the right choices, and we want all the ducks aligned, ducks in a row, so to speak. Gold, let's look at that. As I said, overnight, on when the election came, it was up. It was set to open up massively, which is what I'd have expected from the markets being blindsided the way they were by the Trump win. So it's truly bizarre action. And what's also strange is that the market's latest narrative is that Donald Trump is going to cause reflation, inflation by all this infrastructure spending. Well, if that's the case, then why is gold being dumped? So now remember, there's two things. There's investing and then there's trading. Investing is things like perhaps physical gold or stocks that you just things that you've just like put away for a longer term sort of effect. Now, and that's more investing. Trading is short term. So we've got two pictures going on here with gold. Investing longer term, for example, owning gold coins as I do. That hasn't changed. The fundamental picture for gold, as far as I'm concerned, has not changed one bit. So as far as I'm concerned, gold still is still there, just like it's always been. Trading wise, though, as I was explaining, it was good while gold was walking up this 200-day, and that was impressive. It started to move, and this week, as the election started to unfold, we saw gold come down again, and now it's definitely broken support, and it's down below the 200-day. So that if anyone was if I was trading that. Which I wasn't actually trading gold, then that would have I would have wanted to get out around here, and as you saw, it went down further. Same for the gold miners, except I was in one gold mining position, which interestingly didn't fare as badly as everything else. Royal Gold started to make a nice move, and naturally impacted by the drop in gold price, fell as well, but notice how it's still on support. So I'm still in that position, and that's actually very nice support, which I say is bucking the trend from everything else in the gold complex. So I will look to sell that if it goes below the 200-day around 63, if it closes there, something like that. If I wasn't so cautious about the whole gold complex, I'd say that was a very nice buy point, as that support there intersects with this rising moving average. Shame there's so much uncertainty there. So let's look at a few opportunities that are looking interesting. Let's look at Amazon. This is in a huge uptrend. I'm going to go to the weekly chart for a bigger picture here. I don't need to explain much about Amazon. It's a monster stock that's in a massive uptrend. But it took a dive after the election because, nobody knows the reason why, but I suspect the reason why is because Amazon was anti-Trump, and now they could be facing trouble when Trump takes the presidency in January. But right now it's still kind of hanging in there, let's see. I'm going to see how it looks like it's got support around 735, something like that. There's a huge amount of points involved there, so it's not one to be taken lightly. But for any other kind of trades, options, whatever, that could be an interesting buy point there. What is actually a little bit better than that, I think, is Facebook. If you look at the upturn trend here, similar story to Amazon with this, why it took a dive, but that's a solid uptrend, and it's very, very close. Remember, manage the downside and the upside. See if the upside will take care of itself. At 119, that's a nice entry point for Facebook, so I'll probably prefer that one over Amazon. I'll look to enter around that with such a tight stop loss at a closing price of 117 or something like that. Just as it gets, you notice it doesn't like to close below its 200-day average, and it's very close to it now. So that's a pretty low risk bet there with plenty of upside. We'll see what happens there. That could be due for a bounce. Also looking at some defense stocks to benefit from infrastructure spending. As you can see, this is Raytheon. It's got a nice breakout there on high volume. Again, there's a lot of points in flux here, so it's not one to be taken lightly. But I would be looking to enter around 145 on that, and try and get in on that trend. What else have we got? We've got. Let's look at a couple of financials. Infrastructure and finance and banks are seem to be the way the trend is shifting. Let's look at credit. Look at it's much clearer on the weekly chart here to see why this is interesting. Credit Suisse, the banks may be finally pulling out of the doldrums here, above the 200-day. That's looking good with plenty of upside, and basically I'm going to make my stop there below the 200-day as a close on the weekly. Barclays is a similar picture. I'll make my stop there. The weekly closes below the 200, the first close below the 200-day, the 40-week as it's a weekly chart, with plenty of upside there, and try and ride the trends on those two. What's interesting is the one that's been in real trouble lately, Deutsche Bank, is showing similar signs there, but just to give you an idea about how things are coming back in the banking sector. I'm not sure I touched that one though. So those are looking good. There's a couple of names here that I'm just looking at as we speak. Morgan Stanley, see the big banks are like the big investment banks like that, and Goldman Sachs is another one out of the blue. Literally on Wednesday morning, the world decided that Trump win was great for banks, and so that one's flying away. I'll keep an eye on those. They could come back to trend shortly. In fact, I think it won't be surprised if the overall market has a little bit of a correction this week. So I won't be surprised at all to see a few things come back into maybe buying range. So that's what I'm looking at. Also, let's take a look at the yen, Japanese yen. That is now below the 200-day. I think that is shortable as long as it's below the 200-day. We've seen a lot of dollar strength this week, which is what gave rise to the gold going down. So I would look at shorting that at 90 with a stop close at 91. Not much to lose there, and that one could keep on going down. So there's plenty to talk about there. These are not huge trades, but there's certainly something I'm looking at right now. Not in a big way, because the overall market picture is still very unclear. But there's obviously some strong movement. So if the opportunity is there, let's play along with some low downside bets with tight stop losses. And it's just to see what happens next and take it week by week. So speak to you next time. Thanks.